Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening, as we're now here on Wednesday, the 10th of April, 2024, and the time 6:25 p.m. Central Time. Now, before I get too far, let's take a look at what's coming up and what happened today. We get the European Central Bank monetary policy decision around 7:15, and then shortly thereafter, Ms. Lagarde begins her press conference. I fully expect them to be very dovish, talking about the June probability of a rate cut. Jobless claims come out at 7:30, and we get the all-important PPI number at 7:30. Now, I expect PPI to be cooler than the CPI because it doesn't include shelter and some of the other big variables. Auto insurance just kicked up dramatically and carried the day today. But, you get those high variables that make it up. You try to strip them out when you get to core CPI. But when you look at all the numbers here, even the core CPI was a hotter number. So CPI came in strong in any way you want to cut it. Is it a bump in the road or a trend? It's 3 months in a row now of stronger CPI. I'm not saying it's running away to the upside, but I'm saying it's not breaking. And the not breaking means, in my mind, and I'm probably wrong, but my mind, you got to have 3 in a row that fall in order for the Fed to want to make a move. If they've gone through 3 without raising, they should go 3 without breaking. And I think you'll hear a number of analysts say we want to see 3 of a lot of things before we say there's a trend that is setting in. 2 won't do the job. Just keep that in the back of your mind. Could I be wrong on it? Of course. Do I think I am? No, I wouldn't say it if I thought I was wrong. Now, as we take a look tonight, you can see the market is diving again. You had a late in the day short covering rally as we've been getting. And has anything really changed? Now, forget CPI hot. We were all discussing, the market doesn't need the Fed to cut rates. But now that you see they're not cutting them, the market went into a tailspin because at the end of the day, the naysayers are always saying you're going to get a cut. All right, if you dove into the numbers, about a third of the categories are under 3% inflation. They're actually slipping, but that means 2/3 aren't. So it is still a number that 30 some odd percent number is growing, but it's not enough yet to carry the whole thing down. Will it? Don't know. The other event of the day is supposedly good intelligence sources from a number of areas are saying that it looks as though Iran is getting ready to strike Israel. Now, is it Iran? Is it through their proxies? Iran knows if they hit with missiles from Iran, Israel's going to hit them right back on their land. The thing that strikes me is all the oil that's sitting there, and you can't protect it all. You can have all the defense systems you want, but Israel has a pretty good army too, and good missiles. So who the heck knows? I think that, that scared everybody. The reality of it came in when Lufthansa today canceled air flights to and from Iran. So not good. So we'll see when they want to pick them up again, but that's where you're at. And that's one of the reasons you came back in the energies. Everything was down hard until that news, even the gold, and that number picked it up. So I think the market wants to see 2 events. When we wake up in the morning, did something happen in the Middle East? Number 2, is PPI going to come in weaker and say that the CPI is a nice number, but when you take together PPI and CPI, if both aren't up, then the PCE on April 26th might still come out, and that's the Fed's favorite index, where the Fed isn't moving one way or the other. A strong PPI, there's no arguments I can make then other than the economy's so good, why should the Fed at this point or in the near term cut interest rates? How's that? So you could still be at none. That's what you got to worry about. When you look at the Dow, you're down 1.12% this week. If we come back to last week, you were down 1.05%, and the week before that, you were up. So we don't have a big drop on a weekly basis going on right here. You certainly came down pretty hard on the daily numbers, all right? But I looked at the weekly. If I take away where you're at right now, today alone you were down 1% in the market, but you've been hanging sideways. So this was the first real break, and it's an outside day down. The importance of outside days is to read their continuation patterns. They tell you a change has taken place. Well, when we take a look at this market, you have a higher high and lower low. I don't see a trend at work. I do see that if today's high, which was Wednesday's high in the stock indices, those that had outside days down are taken out tomorrow and or Friday, that you capture the shorts in the market and the market probably moves up again. Barring that, the battleground has been fought, past tense, at the 18-day average. And so far, with today's action, because of the outside day, the bears took control of the market. Where's it going? I think you're at your first objective. 5188's my target on a Bollinger Band. I think Bollinger Bands are just super important. And the reason is because the algorithm will sit there and 95% of the time keep the market within it. And when you tie it together the way I do slow stochastics, I think you get an edge in the market. Now, my slow stochastics won't look like yours. Mine are going to be a little different because I modified the program to handle it the way that I work with it. And I did it before I ever did this on my own. I went to the founder of slow stochastics, George Lane, showed him what I thought I had found. And he said, you know, the whole reason I do this is because guys like you are supposed to take it and carry it to wherever you're going to carry it. And he looked at the logic. He said, I'm not arguing your logic. And I like what I see. But I do think short covering the day could happen now. In the NASDAQ, you're coming right down to that number as well, and another outside day down. So I think these Bollinger Band numbers are all in play. Take a look at what you did here. Another outside day down, oversold market, hit the Bollinger Band. Market suddenly stopped at that number, and the 100-day average is right under that. The Russell, the same thing. So all of them are down to the spots where the 100-day average, the Bollinger Band. That's not a buy signal. It's a signal to cover shorts for the short sellers in the market. We'll see if they listen to that or not. But I'm the first to admit, certainly if Iran and Israel go at each other, it's not bullish the stock market. If Iran through its proxies go at Israel, it's just more of the war that's been going on. If PPI comes in hot, that is not good. If PPI comes in cool, that's real good for the stock market. So we'll see. In the 10-year notes, another huge outside data to the downside. And the market here, it's been hitting the Bollinger Band. You're getting your bounces. It just missed hitting the zone that would be the resistance. The 18-day average fell back. Same in the 5-year notes. But now you got 2 days that you're trying to stay under that band. You only stay under it 5% of the time. Be a bit cautious, and you are oversold. Dollar went right up to the upper band and stopped. Isn't it amazing how often it does that and then gives you slight pullbacks? But what I think is going on is the dollar is saying to you, no. I think other currencies are ready to break because they're ready to cut interest rates. And this news puts the Fed back even further. I know there's people that say now it's a July cut. I don't buy into that at all. September to me is the earliest it can be. And I don't think that that's a political time to worry about. The election's in November. A cut in September, I don't think sways the voters one way or the other. A cut right in front of the election? Nah, the Fed won't do that, in my opinion. That's too political looking. In the eurocurrency, a higher high, a lower low. Look where you stopped again. You've got to learn how to work with Bollinger Bands and why the pros look at these numbers. British pound, you think it's just magic? It isn't just magic. There's reason for it. You're oversold as well. But all of these currencies stopped that run they had to the upside, and they stopped in unison practically, if you take a look at things, at the 18-day average of closes. Even the decline in the dollar, that's where it basically stopped. So Bitcoin hanging at the 18-day average, trying to join the gold market. It's in an uptrend. I think you'll see people looking at support at 68,690, but I don't like the fact that to get in there, you're already in overbought territory with the reading over 70. In Brent versus WTI oil, I just am still friendly if oil supplies are impacted. You're overbought here. I don't see a thing that I'd want to do yet in terms of money. You lost the embedded reading right through here. Watch, 77 reading. Now, today a 78. So you have to go through the whole process again. Can the market just pick up and run? Count on it if Iran and Israel go directly at each other. But barring that, you've got a pattern here where you could slip back to the 18-day average for no apparent reason. Same in the gasoline, not quite. This market suddenly's got higher lows, higher highs again. The battleground, certainly the 18-day average, and you're overbought in the market. And in that gas, tell me where the market peaked out one more time. I don't know that it's a top, but that's certainly the resistance, and the support came in against the lower band. So that's how you work with them. So how do you learn to work with these bands? What's the importance? What are the steps you do? Well, I want to teach you that. All you need to do is go to our website at iraepstein.com under the word education. Course is right there. Move your cursor to the top up here at any point when you watch this next ad that we'll put up, and it'll take you right there as well, okay? It's iraepstein.com under the word education, learn. I'm Ira. I'll see you in the morning. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.